Welcome in, everybody. It is episode 3 of Charts and Checks. We are your hosts, Don Foyani, the gorilla with glasses, and I am here with Alvaro Pereira of the Bilingual Stock Market channel. Say hello to the folks.
What's up, folks? What's up, buddy?
How you doing today, my friend? You have a good day?
I am doing fantastic. How about yourself?
Very good. I'm doing well. Another good day in the market, in my opinion. Got a little bit of action with Tesla and Google earnings.
A bit slow, yeah, but you know.
I mean, Tesla down 9%.
I mean, the report was horrible, so
Mm-hmm.
yeah. It
Well,
went
in this
down as expected, right? And Google posted a very good report. So, but you know, the expected move wasn't exhausted to the upside, and well, maybe you know, the markets need to take a rest.
Hey, maybe we'll touch on these reports, but in this episode, we are going to cover Microsoft, Robinhood, and Coinbase from a fundamental, technical, and financial perspective. And we will start with Microsoft. Do you mind if I kick it off, Alvaro?
100%. Microsoft reports next week. This is going to be a big report, for sure. Mm-hmm.
Right. Yeah. So I want to show everybody first how the Mag 7 have stacked up year to date. This is as of yesterday's close, so it doesn't take into account... Actually, it's as of today's close, so it does take into account Google's move today. And does anything here stand out to you?
Well, this is a chart of the Magnificent Seven stocks.
Year to date, yeah.
Year to date, okay. Year to date. So NVIDIA is the best performing stock so far. I mean, year to date.
Right.
Followed by Meta. Microsoft is up 21%, which is an
huge.
unbelievable, return year to date. And Tesla is the worst performing stock in the group, which is normal, I would say, given the most recent financial performance of the company. So I don't know. What do you make of this?
I take this as the market differentiating between who is executing on their AI strategy.
Correct.
So right now, NVIDIA is obviously the clear breadwinner. They're the ones selling the chips, picks, and shovels. It makes sense that they're first. Meta and Microsoft have the cleanest and clearest stories. Amazon, it's there, but there's so much going on in Amazon that it's hard to give it full credit. And Google's finally found its footing. Apple and Tesla are the only two Mag 7 companies that are negative year to date, and they're the only ones without a real AI strategy.
Correct.
Yeah.
I mean, Google is under attack, supposedly, right? Because of, the
But
AI
I think
bots such as OpenAI and stuff like that. But I mean, yesterday's report was very good, I would say, right? So
right.
And
right.
And Microsoft reports next week, and Google actually posted a very good report on cloud revenue, which might be some sort of leading indicator in regard to Microsoft.
I would totally agree with you. I'm happy you went there. So what I alluded, the reason I showed you that chart is because, in my opinion, it's a market's endorsement of their AI strategy, which is to leverage the technology through their partnership, their 49% ownership in OpenAI, to make Azure a real AI-enabled platform. So the path for them is really, really simple. They just got to make Azure worth paying more for. And to a certain extent, I think they've convinced the market that people are going to do it. Now, the S&P 500 is only up 8 or 9% year to date. So the fact that Microsoft is outperforming by 23% is really quite something, and it is a massive company. And for those that don't remember, last quarter, when we were in the midst of the tariff scare and people were throwing away growth, no one wanted anything to do with anything, it was Microsoft and Google's quarters that reminded the market why the Mag 7 has become what they've become. They grow regardless of the environment. So when we get to, and you said Wednesday they report?
And if you let me add something.
Yeah, do it. Absolutely.
So if you take a look at the capital expenditures of Google, I mean, they are going guns blazing, investing in AI, right?
Yep.
So a very good, very good news for NVIDIA, to say the least. And the only thing that I would be concerned about in regard to Microsoft report coming out next week, I think on Wednesday, right?
Yes.
We'll review that, okay? Is capital expenditures, because if Google is going guns blazing on capital expenditures, I think that the same thing will the same thing will happen probably with, or this is going on as of now with Microsoft and Amazon. So, this is a race to see who is investing in the most aggressive fashion in AI, right?
Right. And I'll say that, sorry, did you have anything else you wanted to add to that? Because that's a really great segue into how I think the quarter is going to go.
No, I mean, if you ask me now,
go ahead.
Hey, Alvaro, do you think that Microsoft is going up or down on Wednesday? After having seen what happened with Google, I think that the risk is to the downside because I think, I could be mistaken, I am not making any prediction over here. I think that Microsoft is going to say the same thing that Google said yesterday. We are investing on AI, in a very aggressive way because this is the future and, So I am expecting very high capital expenditures, and we would have to see what happens with free cash flow. If maybe Microsoft can compensate the AI investment or the capital expenditures with a very solid free cash flow growth, we'll see about that. But I don't know. If you ask me today, I think that Microsoft is going down and is going down next week. But I don't know.
That's a great way to recap it. I kind of agree with you. I think there's probably a 5% downside move in there, but something that gets bought up.
Valuation is very expensive. Yeah, the expected move, let me tell you.
Go ahead.
4.5%. Yeah, correct.
Yeah, and that 5% is just because that's kind of what Broadcom did. It's what a couple of the other big companies that were on a tear and had great quarters did. In my opinion, what's going to matter here, the big money number, as it always is for this company, is Azure, because Azure is how you're going to measure the AI ROI, or what I like to call the ROAI, return on AI investment, which is what the market is super concerned about. Now, the CapEx is probably going to be erased just like Google did and just like I assume every other Mag 7 company is going to do. But the market might not freak out too much if they meet or rather beat their Azure growth numbers, because the market doesn't care what you're spending if you're meeting your growth numbers. Everyone understands that the CapEx is to propel future growth, and so long as Microsoft meets the Azure growth number, I think they're free to spend whatever they want. At least that's what we saw with them last quarter and Meta last quarter.
So it could go down, but maybe the dip will end up being bought out.
I think it gets bought, yes.
If Google reported better than expected on cloud revenue, then, Microsoft is the largest company on cloud. So, we can make a case that's a very positive leading indicator towards Microsoft report, right? So,
I would say this. Remember when we talked about Palantir? I think it was in the first episode, and you mentioned they wanted to be the Microsoft of AI, correct?
No, that's what Dan Ives told me.
Sorry, that's what Dan Ives said. So
that Palantir was going to be the next Microsoft. Wow.
Right. So what Microsoft has done is they want to be the AI of the enterprise, whereas Palantir wants to be the AI for the government, or the OS for the government, however you want to put it. So Google Cloud is a slightly different business segment, but what Google's number showed you is that the demand for cloud compute, their general environment, is still very favorable. So we can expect the same from Microsoft's clients.
There you go. Awesome.
Yeah, perfect.
Let me take a look at the technicals.
Let's jump in.
Okay. And let's also take a look at the valuation of Microsoft. And let me share my screen. Am I doing it? Yeah.
Yep, you got it, my guy.
Okay. So, Microsoft is in a clear uptrend above all the moving averages. So
this is an all-time high?
Yeah. So there's nothing wrong with the chart above the 5-day moving average, 20, 50, 100, 200. So, can this stock keep going higher? Of course, as long as it can consolidate above $509. Are we going to see profit taking into the report? So what would you do, Dan, if you maybe, bought the dip back in mid-April at $352, and you had a winning position in Microsoft headed into the report? Would you be locking in the profit? Would you stay long?
So what? I'm up 60% if I bottom ticked it. Mm-hmm. So there I have two.
Would you lock in some profit? Would you stay long the stock?
I won't lie to you. What I would probably do, if I got lucky enough to bottom tick Microsoft, I'd be very, very reluctant to sell it. However, I think the majority of people are going to be looking for an excuse to sell this thing. Mm-hmm. If I bought Microsoft anywhere during this ride up, I would be writing covered calls into the print, because I just don't think we're not going to wake up and see Microsoft up 10%. It's just not going to happen. Something crazy.
Yeah, the expected move is $25.
Okay. Okay. I guess I'll say this.
25,
Microsoft.
$26. So maybe
Microsoft.
we could see a test of the 50-day moving average, maybe to the downside.
Yes, and I think it would get bought. I think it get bought.
If the report comes out better than expected, of course.
Yeah, if I bottom tick this and I was up 60% and my anticipated downside was 5%, then I'd stay long. I wouldn't do a thing.
Yeah, let me see. Okay, let's go see some multiples of Microsoft as of now. So let me see. Can you see my screen? Yeah.
Yes,
So,
got it. G over Nova.
The valuation. The valuation got to be very high for Mr. Softy, but let's go see. Let's go see. So we have a market cap of $3.7 trillion, and Microsoft is trading at 39 times last 12 months earnings. So the P ratio of 39, 33 times forward earnings, and a price to sales of 14. So I mean, the report has to be like way better than expected for Microsoft to,
of course,
to go higher. I still think, and this is not a prediction, of course, that the risk is to the downside here. Mm-hmm. So we have an expected move of around $25, but the execution of this company is phenomenal. I mean, needless to say, if you take into account the size of this company. So get this. Let me show you some numbers here. So Microsoft, let me take a look at the income statement. So 14% year over year revenue growth. This is an excellent figure. Take a look at the revenue growth here. Take a look. Unbelievable.
I mean, just permanently compounding.
Unbelievable. This is an unbelievable company.
Sorry.
Take a look at the net income. $25 billion of net income on Q3 of 2025. Because for accounting reasons, they say that the Q1 of any year is the third quarter, right? But they are actually going to be reporting the second quarter of this year.
Right.
But so take a look at the last quarter. They reported $25.8 billion on net income. Unbelievable. Net income growth 17% year over year. So what's not to like about Microsoft? The multiples. I mean, I would argue the multiples. So I would say we can make a case here that this stock is fully priced at the current level. So I think that maybe we could see we could see this stock going down, and if the report comes out like better than expected, then this could why not be a potential buy the dip opportunity. $20.3 billion in free cash flow, bro.
And that's with all the capex.
Unbelievable. What a company. This is unbelievable. But take a look. Here's a risk. Capital expenditures. Take a look.
Yeah, no, it's going up.
Capital expenditures are going ballistic. But take a look at what I'm telling you. So quarter over quarter, free cash flow went from $6.4 billion up to $20.3 billion.
Yeah.
So this is going to be a very important metric, So,
yes.
Okay, keep investing, keep increasing your capital expenditures, but please, compensate that situation with free cash flow growth. So
what's amazing is the fact that if you look at EBITDA, net income, despite increasing the capex, they've managed to keep growing their EBITDA and their net income despite it. It's rather impressive.
Get this, and some analysts, I guess that the Knives is one of them, believe that Microsoft will be a $600 stock 12 months out. Go figure. And take a look at this. I wanted to show you this.
20% expected return? 20% from there? Yeah.
Go figure. Yeah.
20%. Yeah.
$613. Correct.
Yeah.
So take a look. If we take a look at the projections of the analyst revenue growth, so 2027 14%, 2028 13%, 2029 11%, 2030 8%. So when it comes to these kind of companies that are like AI related, that are supposedly leading this new industry of artificial intelligence, you need to see year over year revenue growth above 10%. So until 2029, no analyst out there thinks that Microsoft will not be leading the AI the artificial intelligence race. So I mean that everything looks super good on the company. We have a $25 expected move. I think that with the current multiples that Microsoft is trading at. I think that the stock is fully priced in. We could see a drop. We have a $25 expected move, but if the report comes out way better than expected, and especially, as you pointed out, if cloud growth, the revenue growth from the
Azure
from Azure is better than expected or remains solid, I think that the dip might end up being bought up. So
I think we need to see a change in the underlying market conditions to see the dip not get bought.
correct.
Yeah.
Yeah, like I don't know, something that maybe scares away the markets and stuff like that. But correct. In regular market conditions, if the report comes out like better than expected, if we see a $25 drop, it could be a buy the dip opportunity for sure.
Yep.
So now we have, what do we have in deck?
We're going to go to Robinhood.
There you go. And Robinhood is reporting. Well, let me see. Let me tell you
for it.
quickly before
Yep.
you take control of the screen. So
No, you can leave whatever you're about to put up. I don't actually have any slides for this one. We talked about it before, so I'm just going to give a general overview.
This is an 11% expected move on
That's crazy.
Wednesday
Could be
at
more.
4 p.m. 4
After
5
the
p.m.
close.
After the close, correct. I'll take a look at this. So 83% of earnings whisper subs believe that Robinhood will beat on earnings and revenue. And I don't do I have okay. And 68% believe that the stock is going higher.
That's pretty cool.
Yeah, that's pretty cool.
Yeah.
So but let me tell you something, bro. You know that I had an in-person meeting in New York City.
Yes. Yes.
That was like I don't know, like 2 weeks ago. So I was talking to the guys. I had like 40 people attending the in-person meeting, talking of course about trading and investing in the markets. So I asked. There were 38 people easy. Please raise your hand. Who is trading on Robinhood? Every single one of them, bro.
Oh, yeah. Doesn't shock me.
Bro, none of them knows Schwab. Inactive brokers, forget it.
Yeah.
Robinhood, bro.
I'm happy you mentioned this, the perfect segue, because I think Robinhood's goal is to become the ultimate winner in retail trading. They want to become the one-stop shop for everybody that is in their 20s or 30s that wants to get into investing. They have the brokerage, they got retirement, they got futures, they have options, event contracts, crypto, tokenized stocks, staking, lending. I'm just reading a list now that I compiled here. AI, wealth management, news, cash. They are trying to become the one-stop shop for young investors in their 20s and 30s before they get to the point to where they're ultra wealthy.
Yeah,
it's an incredible business.
Yeah, the way that this company is attracting young investors is simply, unbelievable. It's unbelievable.
Do you want to pull up the valuations for this, or start talking about that? Because I think it's a great. While you do that, I can kind of mention what I think is important. Okay. They're trying to become the trendsetter. We talked about it a little bit. There's a lot of Schwab and Fidelity are trying to catch up to what Robinhood has created. They're going to need to hire a lot of people to do it, which will mean money and time that Robinhood's already spent. So while Robinhood and while the incumbents catch up, Robinhood has this phenomenal advantage where they're going to be minting money while their competitors have to spend it.
Yeah, I think that from a retail investor's standpoint, there are no competitors for Robinhood.
No, I would agree. And it's funny, the other day, I know we maybe mentioned this before, but Robinhood got an EU probe with stuff attached to there to catch a token event. They're only a $90 billion company. Normally, the EU waits for you to get a little bit bigger before they start coming after you as a US tech giant. In my opinion, the EU sending the claws out for Robinhood is super bullish. It means they're doing something that's disruptive and technologically savvy. In my opinion, when I saw that headline, I should have bought more. But I'm happy with the position that I have.
By the way, I didn't know that Robinhood has commercial operations in Europe, right? I thought that they were only that they only had commercial operations in the United Kingdom, I think. So this is new information for me, man. I didn't know that.
They're trying
Yeah.
to get into the EU market, so I'm not sure how far along they are.
Yeah, I think that they are for sure in the United Kingdom. We would have to double check on the European Union.
Do a little more homework
Bro,
on
I
it.
mean, this is a $90 billion stock.
Yeah.
$90 billion market cap stock. I remember when this company had a market cap of $6 billion. This is impressive. So the valuation is super, super, super rich. So it trades at 58 times on last 12 months earnings, or a P ratio of 58. It trades at 72 times forward earnings. I mean, forward 12 months earnings, and we have a price of sales of 28. So anyone that is paying Robinhood $100 per share is basically paying $28 per every $1 of revenue that this company is making. So the valuation is very expensive. The markets are trading at all-time highs. By the way, let me see something. So the expected move is $11. This got to be a roller coaster ride. So let me share my screen again. Let me take a look at the technical chart over here. Okay, Robinhood, I got it. It's an 11% move. We're starting to see a bit of profit taken here. So
that'd be a big move. I would expect 90 to be support.
$11 is the expected move as today's close. Okay, as of today's close.
Yep.
So yeah, I mean, sellers have started to step in. So Robinhood already lost the 5-day moving average in white. Say that, I don't know, maybe tomorrow the buyers recapture this 5 DMA, a potential process of consolidation above $100. I mean, it could be maybe, allowing the bulls of Hood to retest all-time highs at $113. If Hood keeps dropping, I would keep an eye on the rising 20-day moving average in pink, $97. It is pretty much coinciding with the previous level of resistance back from early July. So yeah, it's going to be a $10 move, pretty much. The short looks good. I mean, it is an uptrend. I would say that the fact that the earnings support is how many days away? 4 or 5 days away?
Yeah, 4 days, you said.
Correct. And if we also say that the 5 DMA was broken to the downside, so maybe sellers are starting to step in minor time frames. And that could be, maybe signaling that we are about to see a bit more of profit taken into the report.
Sure.
If the valuation is very expensive, and this is going to be an interesting, earnings report for sure. Let me take a look at the most recent.
On the other hand, though, Alvaro, if sellers do come in, that would actually lower the price embedded expectations going into the quarter. If Robinhood comes into their quarter down 15%, they probably don't need to say as much to keep their stock from falling anymore.
Correct, but
yep. Go ahead.
Yeah. So, I don't know. It is a retail darling done. So I think that if the stock gets killed, quote unquote, say that we see a $10 drop or something like that. I mean, this is a super retail darling. So I guess that in regular market conditions, I don't know, unless something unexpected happens in the markets and stuff, unless we have, volatility picking up and stuff like that, I think that, we are in a super...
Yeah. My point is that if the stock went into the quarter at 105, the expectations are higher than if it goes into the quarter at 90.
Sure. Yeah. The higher the price, the higher the bar, of course. If we take a look at the, you can see over here stock analysis, right? You can.
Yes. Yep. You got it.
Yeah, 50% revenue growth year over year. Jesus. More than balance here. And take a look at the revenue growth. We saw a bit of a decrease on revenue from a quarter over quarter standpoint, from $1 billion down to $927 million, which is normal because we saw more trading in Q4 of 2024, and now in Q1 of 2025 they reported $927 million in revenue. What's the revenue expected at as of now? Let me see. $915 million. So revenue is expected at $915 million. And what did they do a year ago? Let me see. They did $682 million.
30% growth quarter over quarter? Yeah.
Yeah, that's a lot.
A little more?
It's a lot.
A little less, rather.
Yeah. Yeah.
Sorry.
From 682 up to 915 million. And the company, I mean, they are already a profitable company. They are actually a strong candidate in order to be added to into the S&P 500. Net income.
They would need one more quarter of net positive EPS.
Let me see. Yeah,
Because
but
you
I'm
need. Oh
seeing-
wait, maybe not. Never
No, no,
mind.
no, no,
Is
no, no,
that 4
no. Forget
quarters?
it.
Yeah, it's in.
This is,
Yeah, never mind.
yeah.
It's done it.
They
Yeah, never
have
mind.
been
My
making a
bad.
profit for 1, 2, 3, 4, 5, 6
Nope. Yep. My
quarters
bad.
in a
My
row.
bad.
So that's good.
Good call.
And bro, take a look at this. So net income on Q1 was $336 million out of a total revenue of $927 million.
The
So,
margins are crazy, dude.
take a look at this, bro. The profit margin is 36%.
Mm-hmm.
So the commercial execution of the company is great, and I think that they also have a very positive.
I don't think they have any debt.
Cash situation. Yeah, I would like to double check on that. Like, let me see here. Take a look. $4.42 billion in cash and no debt.
They spent some cash though on something. Oh, I think they acquired. I think they acquired something. That may have been what it is. I'll circle back.
But
Yeah.
whatever they did doesn't matter, bro. I mean, the company is sitting on $4.4 billion in cash, no debt. They are no longer diluting in an aggressive way. And they have $4 billion in cash. They should, I don't know, maybe they can announce. I'm speculating here, but maybe they can announce that they might start to buy back shares. And let me see something that could be interesting here.
I'll say this about a buyback: they're too young. I don't think they'd be doing it so quickly. They have stuff they want to invest in.
Okay, that makes sense. Yeah.
Yeah.
And short-term investment for $8.5 billion.
Yeah,
So
it's a nice cash flow.
we have some aggressive investments here in short-term treasury bonds, and that is.
By the way,
that is also helping the profitability of the company, which is good. I mean, that's okay.
I looked it up, by the way. The cash fall in that quarter is probably due to the recent acquisition of Bitstamp and WonderFi. This is going to push Robinhood into Canada.
Okay.
So that's exactly what you want to see.
Yeah, they are not in Canada. You're right about that. So that's another important market. Let's just put it that way. If we take a look at the market structure of Hood here, and what do we see? Demand on top, and at the bottom, supply. Demand buyers, supply sellers. The demand is going up exponentially through the roof, and the supply is going down. So this is a very good looking market structure that makes me believe that if the report is already priced in and Hood goes down 10, 11, 12 bucks in regular market conditions, the dip could end up being bought up. That could be the case. Sure.
Would you buy any call options going into the quarter, or is that too rich for you?
No, take a look. I am not sure in my. Okay, let me. No, because the implied volatility has to be very high.
Okay, that's fair.
Is 65% for July 25th. No, for August 1st, 91%. No, no one should do that. No one should be buying their calls or puts ahead of an earnings report. But yeah, the implied volatility is too high here, 91%. No. So that's gambling. No, I wouldn't do it.
I totally agree. If we do get that 10%, a $10, 10% pullback, whatever it is, if it looks bad, I generally do the 3-day rule where I give it 3 days. And if it's recovered, that's great. If it's sideways, you can wait a little longer. There's no reason to rush into a burning building, so to speak. And if this thing falls 10%, it could get kind of brutal pretty quickly.
And trading revenue for Robinhood is super important, and they also make a lot of money from crypto trading.
Yep.
And Bitcoin has been going on a tear, and the crypto space as a whole as well. So for the quarter, let me see. Let me pull up here a chart of Bitcoin quickly.
Yeah, go for it.
Let's go see that. So this is another factor to keep in mind. So if we take a look at Bitcoin futures, let's see. Because this could be very good news for Robinhood as well. So they are reporting.
I love
Q2.
that.
So take a look. So Q2, which started in April. So from early April to this date, Bitcoin is up 42%, brother. This is very positive for Robinhood as well.
Yep.
Very positive from a trading revenue standpoint, right?
Mm-hmm.
So an interesting report to take a look at. And by the way, because today the last stock that we are going over today is Coinbase. So the same analogy applies for Coinbase, right?
That was a
crypto trading revenue should also be should have been positively affected by the rise on Bitcoin, right? So
yes, these things are correlated. I was actually just about to compliment you. That was a professional segue into the final topic here. I'm going to go ahead and quickly share my screen because I don't think a lot of people know this, but Coinbase makes a decent amount of money outside of just transactions. So I have here, I accumulated a trailing 12 months revenue for Coinbase based on their shareholder letter that was released January, February, March, April, May 8th, 2025. So their most recent quarter. So the top line there, which is still 62% of the business, is transactional revenue. Basically, like what the spread they're making when a consumer or an institution,
or whatever. Mm-hmm.
Right.
And when it says institutional, am I right if I think that has to do with BlackRock and stuff because of Bitcoin ETFs?
No, not the ETF. So let's talk about that.
Okay.
If you look down there,
they
look
are
below,
a super
it says
big Bitcoin holder, right?
They are. Okay. They are. So total subscription and service revenue is now 37% of the business out of the last 12 months. In that are two extremely interesting line items. One is stablecoin revenue. I didn't realize this, but they got a partnership with Circle. They're sharing some of.
I didn't know this, bro. I didn't know this. This is impressive.
So they're making.
They made $1 billion on stablecoin revenue. This is insane. I didn't know this.
Partnership with Circle.
Oh my God! I didn't know that. I was like, "What is this revenue coming from?"
Yeah, no, it's incredible. It's 15% of the overall business, and what's even more impressive is that if you look back at the first quarter in 2024, the business has doubled. So this is a decent chunk of the business that is growing rapidly on a comparable basis. And as stablecoins get adopted and as Circle becomes more prevalent in the crypto in the economies of the world.
Sorry, yeah. I gotta ask.
Yeah.
So stablecoin revenue went from 197 million in Q1 of last year to $1 billion total in 2024.
No. So in Q1 24,
correct,
it was 197. See that?
Correct. But
in Q1 of 25, it was nearly 300.
Yeah, but the compound revenue
over the last 12 months
was $1 billion.
Yes.
Unbelievable. That's a crazy growth.
I believe it's $1 billion. It should be is it in millions? Yeah, so it's billions.
Billion. Unbelievable.
Let me, before I put my foot in my mouth.
Okay.
Let me double check that.
Yeah, that's what I am seeing that figure, and I'm like, wow, what is this? How could revenue went from 197 million in Q1 of 2024 to $1 billion in 12 months? That's crazy. It's a super exponential growth.
It is, yeah. So those figures are in millions. Good call out. So yes, that is billion.
Okay. Unbelievable.
Yes.
Growth.
So,
unbelievable.
Yeah, no, it's incredible. And another interesting part of the business that you alluded to was other subscription and service revenues. This line item only accounts for 7%. It's growing at about 46, comparable quarter over comparable quarter. It rose 46.8. This is the money that they're making from Coinbase One, their subscription service. That's $30 a month, or if you decide to pay annually, it's $300. And it's their custodial fee. So this is the fee they're collecting by being a custodian for all of the huge heavyweights in the space that are managing Bitcoin ETFs and Ethereum ETFs.
Oh, okay. Okay.
Yeah. So
wow.
The story here is, and just if we can, actually, any questions on that before I move on?
No. I'm good. I'm amazed.
Awesome.
Very good job, bro. This is great information. Thanks. Thank you very much. Yeah.
So next, we're going to take a quick look at a 3-year chart that outlines how the stock is done with these landmarks. So in blue is Bitcoin related events, and in orange is the Ethereum related events. In June of 2023, that's when the spot Bitcoin ETFs got announced, and the stock went crazy. We all remember that.
Yeah.
It consolidated for a little while after that hyperbolic move. As it was going up again, we later found out that was anticipation of the Ethereum ETFs getting filed. Went up
Correct.
and then needed to consolidate again, but didn't need to consolidate for as long because then the BTC ETFs got approved.
Correct.
Went all the way up, pulled back again, consolidated. It looked as though the Ethereum ETF approval was going to allow this stock to make another move higher. But that is the month. That is July 2024. That's when we got hit with the growth scare. People were concerned that the Fed interest rate cuts and the AI thing wasn't going to work out. CrowdStrike had that massive outage. Everyone was really confused. We had a bit of a scare in the job market, and we had this growth scare.
In early August, we had a 10% drop in the S&P 500 last year.
Right, and that was all on the precipice of the labor market maybe getting out of hand. I think that was also then when we had the SOM rule get triggered. We had a little bit of movement in the unemployment in the wrong direction.
Everyone was freaking out about that.
And what's interesting about this, and we've been talking about it, that was the story of Q3 in 2024. Q3 has not been great these past couple of years. It's interesting that you can even see it on this chart.
And we have September in Q3, which happens to be
yes,
usually a red month.
Well, that's why Q3 sucks.
Correct.
Now, in June, we just got the Solana ETFs filed, a lot of S1s. We have S1s from Fidelity, Grayscale, Franklin Templeton, Bitwise, Canary, 21 shares, and VanEck. I'm sure BlackRock will get there if they haven't already. I just didn't see their filing. This would be a major tailwind because you would see...
But it was already approved, right? The Solana ETF, we already have it or not?
No, we do not have Solana ETFs yet.
Oh, okay.
They've just been filed.
Okay.
We would see this other subscription and services revenue, maybe that ends up doubling.
Because we are still waiting for the approval of the Solana
Yes,
ETF.
we're not going to see that revenue until the Solana ETFs are approved.
And by the way, bro, I got to ask you, maybe you didn't know anything about it, but I think, the Senate and Congress, they passed the Genius bill.
Right.
There are two crypto-related bills that are still pending for approval. So that could be another potential positive catalyst for Coinbase and the crypto-related stocks, as a whole. So the Roots of the world and the Coinbases of the world and stuff like that. So this is, by the way, bro, according to my experience, this stock usually doesn't go up when reporting earnings. Because this is a stock, you know that I trade earnings on a constant basis.
Yep.
And this is a stock that I usually stay away from because, for the most part, it always, goes down. So in the case of Coinbase, we have, let me tell you about the expected move.
Before you take my screen, I just want to show you, it is possible that the market is already pricing in a hefty bit of revenue coming in from the Solana ETFs finally getting approved. I think we might see a sell the news event when that happens. If so, maybe you get to buy it at 330.
Any potential date for that ETF to be approved?
I haven't researched. It's up to the SEC's discretion. I don't know if there's a deadline.
Okay, perfect. Thanks, man.
You can take my screen now if you'd like.
No, that's fine. I just wanted to tell you that the expected move is 7%. So let me see if I can pull up here a chart of Coinbase. Do you have any? So your expectations are positive in general terms, right? In regard to the report.
I expect. It's so hard. I expect them to have a great quarter. I'll be honest. I wasn't familiar with this company until about 2 weeks ago when we decided we were going to cover it. I didn't realize just how much non-trading revenue they make. It's as I outlined. It's almost 37% of the business. You can have a crazy multiple if 37% of your business is recurring revenue. That is some really sticky stuff that investors are willing to pay a higher multiple for.
Yeah, that's crazy. I didn't know about about the revenue that comes from stablecoins. It's insane. The technical chart looks like the technical chart of Hood.
Probably like Bitcoin.
Yeah, the 5DMA was broken to the downside, so sellers have started to step in. We could see a bit more of profit taken into the print. Next week, by the way, so they are reporting, I forgot to tell you, on Thursday, July 31st at 4:20 p.m. The expected move is 7%, so that would represent a potential push to either the upside or the downside of. Oh, hold, I have an issue here. Yeah, and I need to modify something.
All right.
Here, hold, I have it.
You said 7%?
Percentage. Yeah, I'm doing something here quickly.
Okay.
Yeah, apply. Okay. Yeah, it's a 7% move. So you're looking at something like $33 or something like that. So so the 5 DMA was broken to the downside. The next potential level of interest support-wise could be 380. At 380, we have a previous level of resistance coinciding with the rising 20-day moving average. If that 20 DMA is broken to the downside, 380-ish, we could see, like sellers starting to step in.
I can see that.
In a very noticeable way. Let's just put it that way. If the 5 DMA is recaptured, I don't know, for any reason, maybe we see some sort of front running into the print next Thursday. So above 406, this technical chart could be attracting buyers into it. And let me see if I can show you, if we can take a look at the multiples of going here. Let's go see. And okay, sure. We're still getting familiar with this. Okay, screen.
Yes.
Okay.
I won't lie. If we do get a dip like this, I would be inclined to buy it and maybe even hold it for a fairly long amount of time. I didn't realize that 15% of their revenue was completely based on stable coins, another 7% on the ETFization of crypto. In my opinion, it's a great way to play the growth of crypto as an asset class because of the exposure to the ETF. And I'm very bullish on that thesis.
If you're bullish on crypto, and if you're bullish on Bitcoin, Ethereum, and so forth.
I think the point I'm trying to make is if you're bullish on the idea that crypto will be adopted into the financial world as a new asset class, Coinbase is a great way to play it.
100%. It's a crypto-related stock. And did you see Tom Lee's interview?
I didn't.
2 days ago. Yeah, he's saying that Bitcoin is headed to $1 million. So if any of you believe that Bitcoin is headed to $1 million, then if Coinbase goes down $30 on the print, you buy the dip, I guess. I mean, $101 billion of market cap. We have a P ratio of 74. Coinbase is trading at 71 forward 12 months earnings, and we have a price to sales of 15. So we have a market cap of $101 billion that equals Coinbase last 12 months revenue 15 times. So it is an expensive valuation.
But in your opinion, Alvaro, go ahead.
Yeah. No, it is difficult to evaluate the multiples of Coinbase because, I mean, this is a stock that trades pretty much based on whatever Bitcoin does. Mm-hmm. So it is difficult. I mean, I can take a look at the revenue growth and the net income and stuff like that. But let's face it, guys. I mean, the report could come out, I don't know, maybe worse than expected. If Bitcoin keeps going on a tear, then Coinbase is gonna follow suit. It is what it is.
To be fair, though, Coinbase can have a fantastic quarter and still sell off 8%.
Correct, and it usually sells off after reporting. So revenue growth year over year, 23%. Let's go see. I mean, the revenue growth doesn't look as solid as Hood.
Oh my! You know what's crazy about that chart?
Yep.
I bet that looks a lot like what a Bitcoin chart looks like.
Yeah, probably.
I think it's directly correlated.
Correct. Exactly.
Yeah.
So we have a profit margin of 3%, way lower.
Not great.
Relative to Hood, correct. And
Not
we
great
have
at all.
net income of $61 million. And this is, I mean, take a look. I mean, we don't even have 3 quarters in a row.
No, that's tax.
Oh, my bad.
You're good.
Net income. Okay, there you go. Yeah, the company's
because this just got into the S&P 500
on a consistent basis. So it could even be added into the S&P 500. You don't know.
It did.
I was added.
It did when Capital One acquired. I can't remember which company Capital One acquired, but it left a space open, and S&P decided to slot in Coinbase.
I didn't know that Coinbase is trading inside the S&P 500. So thank you for the information. I didn't know that. $10 billion in cash, $4.2 billion in debt, so a very healthy financial situation. They are not diluting in an aggressive fashion. Free cash flow went negative on Q1 of this year, $182 million. Expenses or capital expenditures are under control. So I mean, these are very high multiples. This stock usually sells off after reporting.
Yep.
But again, I mean, it is very difficult then to to do a financial evaluation of Coinbase, because I mean, if Bitcoin keeps going higher, Coinbase will simply follow suit. And let me see what analysts think about the company. 27 analysts are covering Coinbase. So take a look. So we have some analysts seeing Coinbase at $510 in 12 months. The neutral ones, $329, and the bearish ones at $185. And I mean, when it comes to predicting revenue growth year over year for the next, say, 5 years, this is a very difficult task, because I mean, as you just pointed out, bro. I mean, a Coinbase revenue is going to grow as much as Bitcoin, goes up. So this is a very tough metric, let's say, to evaluate. So if you had to take a gamble on any of these three reports, which one would be?
Which one would? Sorry, I'm just going to pull up.
Awesome.
Okay. So if I had to take a gamble, I'm most.
Which
that's
no one
difficult.
should, but
no one should. I would be partial to Robinhood.
Okay. To the upside, like right away?
To the upside. I think they would fall, but if you told me I had to buy one of these three stocks and just hold it for the next 3 months, not knowing what the report would be, I would probably choose Robinhood. I'm sure Microsoft is going to be fine, but that's a really boring answer. Robinhood, to me, has the clearest and cleanest story. I'm actually shocked to see that Coinbase isn't making more money. They're a tech company. I don't know what they're spending their money on.
Yeah, I think so. For Hood, the crypto revenue is an important source of of revenue. But Coinbase doesn't have retail investors buying Oklo and HIMS and out of the money calls and Open Door and stuff like that. So that's a big advantage for Hood relative to Coinbase. So Hood has stocks and crypto, and Coinbase only has crypto. But again, I mean, the figures that you just showed me are impressive.
It's not just impressive.
I didn't know that Coinbase was so into stable coins. So
they have a much more diverse stream of revenues than I previously anticipated, which is why I would say I'm actually most excited about Coinbase. If Coinbase gives me a good opportunity, I'd have to seriously consider it. How about you, Alvaro? Which of these three are you most excited about?
If say that all of them go down after the reports come out, which I think is going to be the case, because the markets are a bit extended here, and we have gone up a lot during the last 3 or 4 months. I would be buying the dip if the expected move is exhausted to the downside. I would be buying the dip on Microsoft. I would.
Of course you would. Good boy. Good man.
Microsoft. There you go.
I like it.
There you go. Okay, guys, so we are going to wrap it up. If you have any suggestions for the podcast, like stocks that you want us to go over and break down and stuff, please drop a comment down below. In the description box of this video, you have the link to my Patreon in English. And you guys also have the link for your paper.
Blog.
Yep,
my blog, GorillaWglasses.com. You can subscribe there.
And
you could also find...
You are updating those papers how often, bro?
You will get... I do a weekly brief every week called the 925. Thank you.
Very good brief, yeah.
And I also do flash notes when they come to my mind. The last one I did, I think, was rather informative. It showed you that if you're trying to bet against the market right now, you're probably betting at the wrong time. I'd encourage all of you to take a look at it. It's called Too Early to Go Short.
There you go, yeah. Because buyers are under the total control of a tape. So we have to wait until we have a correction coming, at least a 5% pullback coming up. I would say that sooner rather than later, but we don't need to guess it. Okay, we just need to sellers to show strength, break some important supports to the downside, and we will be buying puts. So that's it. So
that's it for this,
guys. Thanks.
That's it for this episode.
Yeah. And if you want to hang out, with us on a real-time basis, the link is in the description box of this video. Yeah.
Thank you. See you next time.
Take care, guys. Bye.